Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Happy Monday to you. Monday's the most important day of the week because we're starting off the week and we're coming off that strong end as you saw in my X post on Friday night. Hopefully you had a great weekend. We're right back at it. Hello, Dean, Grace, Sharon, Helen, Paul, and we also got Michael Fairborn in the chat. We welcome him here as well. Now, just real quick as we get started, the main topic that I want to talk about today that I think is pertinent to where we really are is talking about some oversold indicators. We know that some of the things have actually fallen, some stocks, sectors, indexes, and so on. Kind of want to talk about and look at stochastics, RSI, and MACD. Now, also, when we actually do this, we'll show stock and option examples. So we always try to bring up a topic that's pertinent to where the market is, and I think you're going to see why we're going to talk about that. Now, just as we get started here, quick reminders. The information here is provided for general informational purposes only. Options, and when we trade those and show those examples, remember that those carry a high level of risk and are not suitable for all investors. When we talk about the paper money account, we're going to use the software application. Quick heads up, a couple of you asked about maybe the Thinkorswim update. I got another Mac computer. I know that surprises many of you, but I'm running the update. I'll let you know how long it took. I think my other Mac probably took maybe 3 minutes or so. I'll see how long this one actually takes, and I'll let you know. But I didn't see anything major there, but they did run the update. As a matter of fact, it took 2 minutes, and it loaded. So, no, I haven't had any issues there, but I just wanted to follow through on that. Now, also remember that investing involves risk, including loss of principal, okay? And also remember that that is really what we're trying to control. We can't control the upside, okay? I can't control where the trend goes. What we're trying to control is how much capital are we having invested and what's the risk that we're taking. Is it a defined risk or is it variable? And if I say variable, that means that we're maybe having like a stop where we have a hypothetical risk and then we actually know that there's risk to setting the stop, as we talked about each time. Now, today, I want to talk about those oversold stocks, and we'll talk about the stochastics, RSI. When we do that, I want to talk about settings, because that's going to make a difference in terms of kind of seeing whether something's oversold or overbought. And then we'll also bring up kind of MACD as well in that situation. We're going to talk about a number of kind of things to watch for this week. Some of the things that have stood out to me this morning. And also, I want to kind of talk about also some relationships and correlation as well. So let's get started here. So first thing I want to take a look at is, since this chart is here, let's just start here for just a moment, okay? One of the areas that we said we really want to pay attention to is NVIDIA, okay? And NVIDIA, what you're going to notice is so far is it's still struggling quite a bit. Okay, now why is this significant? Well, if the NASDAQ is going to bottom, historically, this has been one of the areas that's provided some strength. Right now, ain't no strength on NVIDIA right now. Now, when you pull this up and say, let's relate this to the semiconductors for just a moment, which has also been pretty important. If we're going to see like a bottom, let's say in NASDAQ, you historically would like to actually see some support levels found in actually semiconductors. And what do we see there? No one's home right now on semiconductors. So that had been a place or maybe a common denominator in some of the bounces we've seen in the NASDAQ. Right now, as of Monday at 1 p.m. Eastern, we don't see that right here, okay? Now, let's pull up just real quick the list of indexes. And the first thing that we notice is the VIX is still being quite stubborn, okay? So whenever we look at this list of indexes, okay, and I have the VIX right there, and if we see that that is still trend 3, boo, okay? If we see that VIX is in trend 3, price above both of those moving averages, and the indexes in general in trend 1 include also the semiconductors, we know we're in that pullback phase. Hence, we're talking about oversold indicators. Now, what you're now going to notice is when the VIX kind of gets to this point, north of 18, okay, which we're sitting at 20 and change, you're going to see that in this case, you kind of might be starting to peak out a little bit. Or some investors, when the VIX is higher than 18, 20, and so on, they might be thinking, hey, I might be starting to look to build a position. Build a position just means that you might not buy the whole position at once. You might buy some shares here, some shares if it goes up more, some shares more if it makes a higher low, and so on. We get dollar cost average, okay? Now, when we look at, let's say, the indexes, equity indexes, and said which equity index is showing a little strength compared to the S&P. Well, when we look at the RS5 through the 63, the index that's kind of standing out a little bit is the Dow Jones itself, and you're also going to see it's the S&P, okay? And by the way, these RS5 is to the ETF product, okay? So it's the SPX compared to the ETF product, okay? That's how it's getting a number there in the RS columns. Now, so keep an eye on those two. We talked about the Russell and the NASDAQ so far, still underperforming. That's why they're in the red and have been in the red, okay? Now, let's kind of just real quick go to sectors real quick. And if we go to those sectors, and this will be an interesting discussion, because when you look at the sectors, it doesn't mean that everything is bad, okay? And we always kind of talk about growth, right? And then on the other side, we talk about maybe income, and maybe on the middle, we talk about value. Some even call it GARP, growth at a reasonable price, okay? And if you look at these, when we talk about sectors here, and we look at, let's say, trend, there's a couple sectors that actually have trend 3. And we see areas like staples, healthcare, financials, and real estate. And by the way, it's not like they're just doing that. In the last couple of weeks, they've been kind of quite strong. And so what you're now going to notice is those have been the pockets of where there's been strength. Now, we're looking at that relative strength over the last different time periods. But the thing we also want to notice is they're showing bounces. This column right there, T for tall hold, trade above the high of the low day, or call hold, close above the high of the low day. All four are showing that currently. Now, when we talk about scripts, remember, they're not guaranteed for accuracy or timing. You want to verify that and have an understanding of what it's really trying to show to confirm. We are also seeing a brand new high in healthcare on the 20-day time period, 1 month, 55-day time period, okay, about 2.5 months, and another brand new high in the real estate. Now, the one that is not showing right now, but we have to give some proper credit, does anyone know any sector that's not showing a brand new high on this because it backed off a little bit? Any sector that we're missing? I want to see if you were watching this morning and even what I was posting this morning. Well, it's actually financials. Financials did go to a brand new high here this morning. Can anyone, now, the other thing to kind of notice on that, when you look at that and say, what else do we see? We see a crossover, okay, MAX, moving average crossover, MAX, and you're going to see it's a positive crossover today, and we see that right on the chart itself. Bring that back up, and there it is, okay? Now, question we have to ask ourselves is what pockets of, let's say, financials are moving to the upside? Now, we're just going to take a quick look at these areas. So if we go to Market Watch, and I want to kind of really embed this in your mind, we have the same list. I don't have a secret list compared to you. I'm using the same list, okay? And if we go to Market Watch, I'm going to go to Visualize, okay? Now, on the left-hand side, when I go to Market Watch Visualize, what do we want to see here? Well, what kind of areas are we probably going to be looking at in terms of examples? Bearish and bullish. Well, when I pull up this S&P 500, now we're going to see the industry groups. Let's first go look at, let's say, financials for just a moment. If I looked at financials, are they kind of in financial services? Visa is quite hot, okay, or has been. MAA, MasterCard was also up there as well. Probably the strongest area has been capital markets, but it's also been insurance. Thursday, we did 3 examples in there, and like Allstate, okay, Chubb, and one other one, maybe it's Progressive, or Aflac, those two. But those have been actually quite strong. The insurers, and that was pretty clear to see, had some nice moves. Keep an eye on those. Now, when we take a look at, say, healthcare, which has also been quite strong, okay? If you take a look at healthcare, you're going to kind of see it looks like an inverse head and shoulder, but it didn't really have a symmetrical right shoulder to left shoulder. I'm not really sure if that matters. Because if that's the case, It's probably more like an ascending triangle. You'll see what I mean in just a moment when we pull this up. If we said what industry groups, is it pharma, healthcare providers? Is it healthcare equipment and supplies? Is it biotech, or is it life sciences? And it sure looks like it's a lot of healthcare equipment right now. Lots of healthcare equipment. Now, when we also pull up, let's say, the staples, okay? Let's go to just consumer staples. Where are they at there? Now, remember when we kind of joked on Friday, and some of you kind of thought that was kind of funny. I don't know. I mean, I thought it was funny, okay? Where are they at here? Well, smoking, okay? Now, sometimes what happens is when markets go down, okay? We call these the vice stocks, okay? So when markets go down, do some people maybe consider more income-related plays, okay? That pay a higher percent of their earnings in the form of a dividend. And you're going to see that Philip Morris still cruising, okay? And if you look at, let's say, Philip Morris, also Altria, that is still pushing as well. Now, you're also going to see food products have gotten a little lift. Beverages also gotten a little lift. And Costco, okay, getting a little push. So this would be something on a daily basis. You'd be looking at this to see where are the pockets of strength in the sectors that you're looking at. Now, in our examples, I'm going to pull all the examples from what I'm showing you, okay? Because I don't have a secret list, which is kind of nice because we're going to have the same list. Now, one of the areas that I want to kind of pull up for just a second is communication. Now, communication had also been an area where if the market went up, we had some push in communication. Well, did anyone notice any communication stock that hit a brand new high here today again? Again, I'll give you a hint. Starts with a T. It was T-Mobile. Why did you do that? Okay, now, so here's the deal. If you've been watching T-Mobile, it's actually had a pretty nice little push here. And yes, it's been a very nice one. And that pink stock, whatever you want to call it, you're going to see that it's had a nice little push. And what you're now going to notice is kind of had like a little plateau. And you're going to kind of see a little top. Okay, a little top there, another little top there, another little top there, and a little push. Now, some technicians might say, well, this is not really like your bull flag. Okay, you don't really get a pullback from the high. And my comment to that person is like, wait. Do you want it to pull back off the high? Or do you want something that kind of goes neutral like that and stays closer to the top? Some technicians, they like the latter, this, compared to this, because if there were sellers, buyers were stepping in to buy it and not letting it fall as much. Interesting. So keep an eye on the little T-Mobile there. Okay. Yeah. Thank you. Luke corrected me. Yeah. Magenta. I think that's the best way to say it. So you go by T-Mobile stores at night, they leave the pink lights on, or magenta, however you want to say it. Now, just real quick, the one thing to also kind of bring up is I want to go back to a stock. So let's kind of talk about, let me kind of say one more thing. So Bitcoin had a $15,000 swing in 24 hours. The US looking to use some crypto as reserves. Now, if the reserves, if whatever those are, could pay down the national debt, that would be interesting. Okay, we'll keep an eye on that. Also keep an eye on copper, okay? Now, we also saw the dollar go down. We've seen the yen drop down, and we've seen the 10-year yield drop down. Remember, we kind of said those could be, if we don't really see dollar going up, yen going up, 10-year also going down, that could be equity supportive. And we're going to kind of look and see if we can't find some bullish examples here, okay? Now, what I want to do, and the only area that, two things I want to pull up. Number one is, what did I mean by inverse head and shoulder where it wasn't like symmetrical? Well, what I'm talking about is this kind of being the left shoulder, this really kind of being the drop down, right? The head, and then this right there kind of being that. Now, I think if we kind of sat here and kind of all drew like a horizontal line, I think we could probably say that's the resistance line. But what you're going to notice is the shoulder, that compared to this, it wasn't the same. My comment was, if that's not the same, then it's probably really more of like an ascending triangle on the right-hand side. I don't think that's a bad thing, okay? I don't think they have to be symmetrical, but it is inverse head and shoulder like, okay? And if you look at that, that is a shorter term high breakout in the healthcare space. Now, let's kind of also talk about one other area that I just want to bring up briefly before we look at our examples. When you look at, let's say, real estate, we've been talking for 2 blasted weeks on real estate, and it broke inside the old channel. Did you see it? What stocks in there are actually pushing to the upside? All right, well, if we go back, let's use the same list. So we're all on the same page. Market Watch, go to Visualize, and I'm going to go down to real estate. Now, not a bad thing when you say, James, there's a lot of different areas where it looks green as of today. You got specialized REIT, healthcare REITs. And by the way, if we go down to healthcare REITs, okay, if we take a look at this, what you're going to notice is Well is actually done pretty well, okay? And also VTR. If you look at those 2 charts right there, those charts have actually been quite strong. Simon Property Group in the retail REIT space, okay, as well. And also, if you look at Weyerhaeuser, we're talking about Timberland. That also had a pretty good big push. But residential REITs, okay, we talked about last week, MAA and so on. Those have actually been some pocket. Now, the bottom line is, I don't care how good the economy is or how bad it is. At the end of the day, people need a place to live, okay? Now, so in the REIT space, you're going to see that real estate management, okay, industrial, not as much. It's really retail, healthcare. I'd probably say that's maybe potentially number 1. And then if you take a look at residential, it's really probably number 2, okay? If we said number 3, it'd probably be storage areas, public storage, extra space storage, those ones down there, okay? Now, you might have a different order, okay? But now, let's kind of talk about some of these areas and kind of use an indicator by looking at Palantir first. Now, by the way, in the last 10 minutes, I just kind of want to talk about some things that might be setting up for the week, kind of take some inventory. Well, you'll notice a lot of times in my classes that I don't totally change what we're talking about every time. We're trying to find trends, and trends are not usually just one day, but they can trend, okay? And so there can be a theme in the marketplace. That's what we're trying to see. Now, number 2 is I want to now move and kind of talk about some stocks that could be oversold, okay? Now, how many of you ever watched Palantir, okay? Now, Palantir, what you're going to notice is it was at 125 and it tanked, and I think you could use that word, tanked, down, what was it, down 30% or more. You're going to see it's fallen all the way down to its horizontal support level, okay? Now, can you just look at the price and say it's oversold? Well, this is where the indicators come in, right? So we know that if we look at, let's say, one indicator that really looks at being oversold or overbought, probably the one of the most common indicators is use 2 of them, is you use the stochastics. We're going to use the stochastics full. And the second one is probably RSI, okay? Now, I want to kind of bring this up with why are we talking about this? Okay, so first off, the reason why we're talking about this is when you get some oversold readings, okay, we're using a stochastics full, which you can get this by just going to the test tube right there. And once you go to the test tube, you can just type in stochastics, and we're looking at stochastics full. The 80 right there, that's the 80 line. That's overbought. And what you're now going to see is the 20 is the oversold. So what we're looking for is how many times do we really see that this stock gets oversold? Now, by the way, it doesn't have to just be a stock. It could be an index. It could be a sector. It could be an industry group. It could be a stock. It could be a future. It could be a current. It doesn't matter. It's used on all of it. And it can be used on different time frames, okay? Now, first off, what you're going to notice is it got oversold there. It got oversold there, and it got oversold there. Now, if you go back and look at the last couple times, let's go back and look since August. When it was oversold, was it a bad time or maybe an semi-interesting time to maybe consider an entry? Well, if we go back and kind of take a look at this, when it got down to there, that's where the stock was. When it got down to there, that's where the stock was. When it got down to there, that's where the stock was. Got down to here, oversold, that's where the stock was. And if you look at where we are now, here we are. Now, the question we always got to ask yourself is, could it do it again? Okay? Now, if you take a look at this, we could probably also say that if we drew like a diagonal line, probably near that diagonal support and horizontal. Okay. Now, just because it's like oversold, does it guarantee the stock's going to go up? No, absolutely not. You can break down through the floor, right? But so the biggest thing is we want to see, could we take maybe some risk? Now, if the stock went from 125 down to 80, what type of strategies would you consider? What type of strategies? Would you be thinking about a buying strategy, a selling strategy if you used options, okay? Now, as I'm getting an answer on that, I want to kind of now talk about this 10 and 10. What is the 10 and 10? Well, if we go up to this real quick and let's kind of give some understanding. So if I go to this right here where it says stochastics full, okay, let me show that. How do we bring that up? And if I go to the stochastics full, just like I told you to do, and go to the question mark. So this is where we get some understanding of what this indicator is really trying to show. Now, what you're now going to notice is a stochastics full, which I'm showing, is really a hybrid compared to a stochastics fast and a slow. They say it's a generalized version. I'm using hybrid, okay? Now, what you're going to see is it also has what's called a K period, and it also has what's called a D period. What I'm now going to do is I'm going to kind of talk about if we wanted to kind of see something that had maybe, now, if you ask me, would you use a 10-10? I would say I'm going to use some different ones. Let me explain why. So number one, historically, if you talk to someone who uses stochastics, they might use, if they're an intermediate to a longer term investor, they're probably going to use a 14-3 setting. That's standard, okay? If someone's intermediate to longer term. If someone said, James, I'm more intermediate, okay? How did you do that? We went right to that little went right to that right there. Click on the gear, okay? And now if we kind of say, look, I'm more shorter term to intermediate. Well, that investor might use a 7-3 setting, okay? And if you said, I'm not really sure what the K period is, you can click on that little question mark and it's going to really load the definition of really what those are actually really looking at. Now, down at the bottom, I want to kind of also make this where we change the width so we can see it a little bit more. I like to change it maybe to like a blue color. Also notice that the full D period, we're going to also change that to width of 3, and we'll just do it maybe like a red color, okay? So we just want to see the differences here, okay? So we look at this 7, we're really looking at, it's a blue, okay? The D, the 3, there it is. You're going to see that that is a red color. Now let's pull this up. Now, if we said, James, I like to trade shorter term, well, you would probably be looking at a 5-3 setting, okay? I'm going to just start with this to begin with, okay? A stochastics full, which is a hybrid between using a stochastics fast, okay, and a stochastics where it's kind of more like a standard stochastics. Now, if I look at this, what you're now going to notice is how many times has this really gotten down to an oversold period? Not very often. I mean, if we truly got down to oversold, you'd probably say there's only been 3 times where both lines were in that oversold region. And it was really late August, January, and here we are. Now, one thing that we're going to kind of show in this example is we're going to try to find some stocks that could be in this oversold territory, okay? Now, I want to kind of bring something up to show some differences here for just a second. If we saw a stock that was kind of more downtrending from the upper left-hand side to the bottom right-hand side, what is the stochastics probably going to look like? Well, one thing that you're going to notice is when it goes up, it rarely stays in the overbought area for a very long period of time. What does that tell you? Probably is struggling, okay, in terms of holding that positive sentiment. But if I pulled up a chart maybe like, I don't know, let's go like Visa or something. If I look at, let's say, Visa, and I look in, let's say, the last couple months when the stock has been going up and up and up, which it went up to a brand new high here today, you're going to see that when it does go up, it can get to the overbought. But what you're going to notice on upward trending stocks, what do I take out of this? If I see stocks that kind of stay in that middle zone, so we know that we're saying oversold is 20. The overbought would be 80. If we see that the stochastics kind of stays the majority of the basis above that, let's just call it the 50 line, that's kind of saying that the sentiment is staying quite strong. So If I went up and looked at the chart, we'd probably be seeing some type of uptrend to the chart. Now, if we looked at a downtrending chart, we probably see that if it got overbought, doesn't get overbought for very long, probably stays below the 50 line quite a bit, and also stays in the oversold period. The stochastics in the chart are not separate. They're linked, okay? It's also telling you something about where the stock is closing to the highs and trend and momentum. Now, if we go back to Palantir for just a second, our first trade example, some investors might say, James, we're in the oversold. This might be early to get in. Why? Why is this maybe early to get in? Okay, well, when we were oversold before here, okay, we could have got in there. But if we just go back to what we normally teach, which is, hey, if you get in when that moving average goes green, okay, and only one of those lines goes green, we call that early. If we get across, we label that as number 2. And if I get the lagging moving average to go green, we call that number 3, okay? Some investors, if they said, James, I like to get across or the lagging moving average to go green, I want to see this come out of the reversal area. Noted. Why would someone try to get in a little earlier? Why would they do that? Closest support. Why would they do that? The implied volatility is higher. Why would they do that? Well, with the higher implied volatility, the premiums are bigger. Why would they do that? Well, they have a lower break even. Okay. Now, so there's kind of pros and cons. But let's say the investor says, you know what, James, I'm going to go back and I'm going to, for example, go to the Palantir, go to Trade tab. We're going to type in PLTR, okay, PLTR. And what I'm going to do, the investor might consider, we're going to go to the April expiration. Now, again, remember, 8/21, the monthly options for March, those expire in 18 days. We are going to go down to the 45 days to expiration, the monthly options. And what we're going to do is we're going to look to sell this $80 put. Now, are we going to sell the put by itself? Well, risky, right? A lot of volatility here. Annualized volatility, 75%. What we're going to do is we're going to sell the 85, sell the 80, and we're going to buy the 75. Now, wait, when you do this, if you sell the higher strike and then you buy the lower strike, the 75, what you're now going to see is it's going to give us a $1.70 credit. So we're using an indicator like stochastics. We're using technical analysis to see where the support levels are, etc., to kind of get a trading idea. Okay? Now, if we look and say, well, that credit is $1.67, the maximum loss, here it is, 333. What do we got here? Well, you got 167 divided by 333, and it's about a 50% ROR. Why is that a little higher? Well, there's more time to expiration, plus the implied volatility is higher as well. Okay? So we're using kind of two things here. Number one, technical analysis, where we see support, what's the trend, etc. But with the indicator, we're kind of saying what stocks might be in that oversold region. Okay? Now, if you had, let's say, 10 positions you were looking to put on, does the investor have to always go look for oversold stocks? No, but they're probably going to see some stocks that are showing that setup. Now, let's kind of go back to something for just a second. James, we showed before T-Mobile. Okay, let's go back to this for just a sec. How does that stochastics look in this example? Well, on our previous kind of example, I said, hey, one of the things that we could also notice with kind of stocks that have strength is we can see that the stock does not come back down to the oversold area. And I know historically people that would say that, well, that's bad. That's not a good sign. I kind of take it the opposite. If you come down back to that middle range, let's say 50-ish on the number on stochastics, and all of a sudden you're getting across to the upside, okay? Many investors would say that's just showing that the stock did not have to fall back as much to get bullish investors to get in. They wanted to buy. So the second example that we're going to do here, using this, kind of having some understanding on the stochastics. This example, the first example was about something that's oversold. It's early. We're looking for a reversal. This example is looking for something where the stochastics has gone down. And the biggest actually thing is here, we might even also include a little volume. Do we get a little above average volume on an average volume of 21 days? That did poke higher on Friday, okay? Now, why are we doing the trade? Number one, stock actually, the area of communication is trying to get a little push. Second, the stock kind of both flat itself with the stochastics here getting a little crossover, okay? Now, I'm going to go back to this, and what I'm going to do in this case, and let's do a stock example because not everyone might be doing options, but if we did do options, which example might we look at? We might look at a long call vertical because it is a little bit higher price dollar stock. But if we chose stock, okay, we're going to right click on the chart, and what we're going to do is we're going to right click on the chart. We're going to actually now go to buy custom, and I'm going to go with stop. You might put a target. Tell me where that target is. And I'm going to go ahead and bring up the with stop. Now, remember, our goal is when we set a stop, we're typically going to go back the last 2 to 3 weeks and say, where do we see support? Where do you see it? Well, we've kind of had some bottoms here, right? A little run up, pull back, run up, pull back, run up. Okay. Now, if we were to draw a line and kind of say, well, where do we see those bottoms at? Well, probably right around 263. Okay. Now, if we took 263 less 2%, that's going to give us a number of 257.74. Now, if someone said to me, James, I don't like to buy any stocks unless they're oversold, that investor is not trading bullish trend and momentum. They're not trading shorter term trend, okay? And they're not trading momentum. If the investor says, no, I like to actually look for stocks that pull back to the middle of the range, they're just showing shorter bull flags, or they're just showing higher lows, and they're riding that bullish momentum. Now, what I'm going to do in this case is we're going to set the stop right at 257.74. I'm going to type that right in, 257.74. And now what we're going to do is go stop data GTC. Now, capital-wise, how much capital? $6,500, which we've been doing. How many shares is that? 23 shares. Type that back in. Give me 23. Okay? Now, 23 shares at this price or less. Stock has fallen down a little bit as we've been talking about it, but this is saying this price or higher. No, we're saying this price or lower. So if that bid-ask spread is lower, we could get filled at a lower price level, okay? Now, there's the stop. It's saying if we enter in the position, it's a trigger to sell at that price, not guaranteeing that price. It's a trigger to sell, but could be filled in lower. That's kind of why we said it's a floating risk, because we don't know exactly where it's going to get filled at. It's a theoretical risk, okay? Now, what I'm going to go ahead and do is go send that order. There it is, and it's sitting right there. Now, if our order is above the current price, there's a pretty good chance that we can get filled, okay? And it just did. Bought the 23 shares, and the stop is underneath. Now, let's go back to just real quick and kind of show something a little different. But I think that's fair to kind of bring up an example of oversold, but then also show an example of something that was maybe middle, okay, and showing some bullish momentum. Now, I want to bring up one other stock, and I want to kind of relate this to the RSI, okay? But before I do that, let me kind of show you what I mean by this, okay? So first off, something that I coined many years ago, and it's just kind of something I noticed. What you're going to see sometimes is you kind of get an oversold example, and then what you're going to see is we kind of make a higher low cross. You see that? The first one, let me label, was right there. It crossed, the blue line crossed above the red. Then the blue line crossed above the red again. And so sometimes what you're now going to see is we did not get to oversold yet, but the blue line is pinching, okay? Now, if we go to this chart, what do we really notice? A little run to the upside, little fall back down, and then what we see is kind of maybe where the last higher low was. Notice where that higher low was, right in this pocket of support, okay? Now, We looked at this chart and kind of said, what do we see so far? It's a hammer-like candle. Now, some investors might say, James, I'm going to buy into that hammer-like candle. Or they might say, I'm going to wait for that stock to take out the high of today again. Now, if you go above today's high, there's a really good chance of that moving average, the stochastics crosses over, okay? Now, when we see the stochastics where we get a cross at a lower spot, a cross again at a higher spot, and maybe a cross again at a higher spot, it's like making higher lows. I call that stochastic coiling, okay? The sentiment is improving, bullish stochastic coiling. But you could also say it's the opposite. What happens if those crosses were negative and it's lower, a bearish stochastics coil down, okay? Now, what I'm going to do in this example on MCHP is we're going to show an example on this. Let's go back to this chart. What's the type of trend we've been having on this chart? It's been pretty ugly, okay? Fair to say. Horizontal support right about 72 and change. Zoom in on this chart, anything above us, old resistance kind of right about 59 or so. Above that, probably have about 64. So we got a little range here, okay? And on the bottom side, probably talking something about 55 and change. Now this is microchip technology, okay? One we don't normally look at, but it kind of has something where it doesn't get all the way oversold, but trying to cross. Now, what I'm going to do in this case is we're going to set like a buy stop, not at maybe the high, but close to the high. Right click on that, where the moving average is, buy custom, and I'm going to go with OCO bracket, okay? Now, if we did a buy stop, we are saying buy the stock if it goes at or above a certain price. You're thinking that if it went to 61 3/4, hey, bullish momentum coming back in, could it go higher? So the target here, the first line in red, what we're going to do is we're going to kind of put that right in the middle here between the lines, and that's about $68, okay? Limit dated GTC, and the stop underneath us, we're going to use about that 55.76, 55.76 less 2-3%, 54.64, 54.64. Now, I'm going to keep that at 100 shares because we could buy 100 shares in the paper money account. Now, I'm also going to do something so we have a little bit more room here, okay? I'm going to take volume off, and I'm also going to just kind of take that off for just a sec to give us a little bit more room to see this, okay? So we got 61.75, which is about $1.50 higher. It's not a hold, okay? We're just saying, look, if we come back up closer to where the moving average is, thinking it might be trying to bounce. On that type of order, you have to understand that's probably not a day order, it's a GTC order, okay, which we changed. We got a target price, and then we got a stop, okay? Now, on this, how come it's not letting me sell it? Well, because the time in force, TIF, they need to be the same, GTC. And we're going to go ahead and confirm and send. Now, I just want to make mention of a couple other stocks that are kind of showing maybe a potential cross, okay, or setting up. So the third trade we actually did here today was MCHP. Now, I want to go back to just real quick, and I'm going to leave the order down below because you might still be looking at it. Dash is another one where we went down to the oversold, and it's kind of showing more of a sign of kind of more of a bounce there, okay? And on the moving averages, it's almost getting a crossover. That's another one we're going to be watching, okay? Now, another one that we're going to be watching that's kind of showing what we call a coil, okay? What do we mean by coil? Well, the last time we had the crossover, the blue crossing above the red, it was in the oversold territory. Second, if you look at this right now, you're kind of seeing that the stochastics lines, they're starting to pinch, okay? Now, if all of a sudden, which if you look at, the beverages, okay, we've had a run up in the price, pull back. Friday was a red candle. Today, what type of candle do we actually have? It's a bullish engulfing. If we close here, okay, we also see a close above the high of the low day dot on the chart. And if you start closing closer to the high, etc., it's probably going to get a blue line crossing above the red to show the increase in sentiment at that moment in time. Notice that we kind of see that those stochastics going upward. What does that tell us? Sentiment is improving. Okay. Higher lows on the price graph. That's another one we're going to keep an eye on. Okay. Now, if we pull this up and said anything else, well, if we also look at, let's say, Costco, okay? Costco's another one going into earnings where we had a cross down here or there, had another cross right there, and now it's moved into that. So the one thing you want to kind of be looking for is stocks that if they do get oversold, how long do they stay oversold for? 1, 2, 3, 4, 5. This is for the whole year. 6, 7, 8, 9. So in the whole entire year, there's only 9 times when Costco got oversold. How long did it stay oversold? Not very long. What does that tell us? Someone was buying the sell-off. Okay. Now, are we saying the past is going to repeat in the future? No. But sometimes the history could repeat itself. Okay. Now, what you're now going to notice is on this chart is it's already gone to the 50 already. So the investor is probably watching for stocks that are kind of getting this now, these oversold areas. Now I want to go back to the S&P also. James, are we saying that we could only use this on the S&P 500? Well, excuse me, on stocks and not the S&P 500 or other indexes. Well, just like on Costco, we haven't had a lot of times where the S&P 500 got oversold. You're also going to notice the same ideas that we saw in Costco. When the S&P 500 got oversold, it did not get oversold for very long. We are not saying that the past is going to repeat itself. That's not a guarantee. Could. But what you're now going to notice is when it got oversold, it did not get oversold for very long. Now, let's relate this. Let's kind of look at the difference between the stochastics full and the RSI. Now, let's kind of look at this. If I look at the RSI, it's a relative strength index, okay? And so what you're now going to see is it rates the strength of a security on a scale from 0 to 100, comparing the magnitudes of recent gains and losses. Now, it's also, like a stochastics, uses an overbought and oversold indicator. Now, if I go down to the bottom and I just say, hey, let's add this for just a second. Let's add this. And let's kind of look and see maybe what does it look like in terms of differences. Now, on this, what you're going to notice is it's using this RSI 14 days, using a 70-30, 70 for overbought, 30 for oversold. Now, part of your homework assignment is I want you to use the exact same settings, 80 overbought, 20 oversold, and I would like you to look at, let's say, start with, okay, the length of 14. Let's kind of visually see what this looks like, and so we can be kind of consistent. I'm going to pull this up, and let's kind of notice what the difference is here. Now, I have some favorites, you have some favorites, okay? I want you to, in your stocks, in your portfolio, I want you to look at stocks using the stochastics full, 80-20 setting, 7-3. Next, I want you to look at the RSI 14 days, same thing, 80 overbought, 20 oversold. I want you to look at the differences. Now, some of these indicators, they're very similar. You do not have to use both of them, but choose one you like better that you understand and you're comfortable and confident to go with. I'll tell you which one I like better next week and why, okay? Now, if we look and kind of say, why do we like the stochastics full? Maybe tip our cards a little bit. Well, we kind of like the stochastics full, maybe perhaps a little bit more, because there's more opportunities. If we look at, let's say, the RSI 14 and said, how many times did the SPX get to the oversold? The answer is it never did. But the stochastics, more sensitive, got down to that oversold period, okay, more frequently. Okay, I got to wrap it up here, but I gave you a homework assignment. I want you to compare and contrast using the stochastics full, okay, the settings I gave you, and the RSI. I want you to look at them in terms of indexes, sectors. You might look at it on gold or industry groups or stocks. I want you to be looking for examples of oversold and also where we're getting the blue line to cross above the red and maybe it's coming out of that reversal zone. I want you to be looking for those higher lows, okay? And that's going to be something that we focus on more and more this week as it's showing confirmation of what's happening on the price. Now, also, I want to give us a quick reminder that this class has been recorded, so you can go back and watch the recording. You can also go to YouTube, our channel, Trader Talks by Schwab Coaching. Subscribe if you have not done so already. And then you can follow Mike and myself right on X as we post throughout the week and the weekend. When do you take a day off? We don't take days off. We're 7-Eleven. We're always open, okay? Now, also remember that with what we discuss, we'll be not just showing this today, but also throughout the week as well, okay? Stay tuned for Cameron May coming up next. And also remember the information we provided here, talking about oversold examples using the indicator of a stochastics and RSI. That theme we'll talk about each day this week in looking for more examples. Remember that all investing involves risk. Understand what is defined risk and theoretical risk with a stop loss. And also remember, this has been the class on trading with technical indicators. Thank you so much. Stay tuned for Cameron May coming up next. I'll be back on tomorrow on Investor Master Series. And also follow Mike in his classes as well as he posts his schedule as well. Thank you so much. Take care. Bye-bye.